there's a lot of talk out there amongst retail traders about the Fed decreasing rates. And as you know, inflation is going crazy around the world right now. It's been crazy since the pandemic. I think we all know that. Like even in Portugal, prices for everything are high. And I don't want to do any like oppression Olympics here, but it's tough. It's really tough, especially for the locals, the Portuguese locals and natives. It's really tough. The taxes are high, the wages are low, and I guess you can say that about every country out there, but it's bad. It's tough out here. And then like the grocery prices that I'm paying here are pretty comparable to what I was paying in Toronto. However, the huge difference is I'm actually getting real food here and not processed shit. So that's a huge thing to note. But, inflation was going crazy because of the low interest rates that we had after the pandemic. And of course, all the endless money printing. So as a reactionary measure to try to cap the inflation that we were seeing all the world over, especially in the Western world, central banks raised interest rates. So that the reason they do this is they make money more expensive to borrow. Because if they make money more expensive to borrow via higher interest rates, the goal is to make people stop buying everything. Stop buying, stop borrowing, stop taking out loans, stop buying houses. We gotta put a lid on this. Because when interest rates are low, then debt is cheap. And when debt is cheap, it's just a natural human reaction that people borrow money. Debt's cheap, I'm going to borrow debt. I'm going to take on more debt and buy things. And the more people that buy things, the higher prices go. So then we get inflation. It causes prices to soar. Before I learned about trading and Forex and how the global economy works, I was very uneducated and I thought interest rates were completely made up on a whim and changed whenever politicians felt like it. Well, it's actually not. That's not the case. So if you weren't aware, let me enlighten you on how interest rates are raised or decreased in a very calculated manner. So that's funny. I actually have this note. It's from my Forex trading. So it's kind of what I'm going to talk about. Interest rates are like a lever that governments and central banks can pull at their own will, based on their goals and based on how the economy is doing. So you lower the interest rates if you want to encourage the people to spend and to strengthen your economy. Because the more they borrow, the more they spend. The more they spend, the higher the market goes. Look at the price of the S&P. Now, you want to raise the interest rates if you want to put a brake on consumer spending. And that's what you want to do when inflation is crazy and prices are soaring too high, too fast. You want to say, oh my God, everybody stop the damn spending. Stop borrowing. And the way you get people to stop borrowing is to raise the cost of the borrowing, to raise the cost of the interest rate. So that's how you keep inflation under control. Now, with that knowledge, let's apply that to current times. Everyone out there is saying they're going to lower rates, they're going to cut interest rates because everyone's struggling with their mortgage payments or whatever. But what I am seeing is they are not going to lower or cut interest rates, especially when we are seeing new all-time highs across the board. You only cut interest rates to stimulate growth. But right now, we are in growth and we are experiencing growth. So if anything, to put a lid on all these new all-time highs being printed, if anything, what they would do is to raise interest rates to stop this from happening. Because this is wild. This is crazy stuff to see. This is an all-time high if you weren't aware. Let's scroll back to 2020. This was the pandemic crash. And you would think, maybe we've only just recovered a little bit from the pandemic lows and all the lockdowns and, all this and that. But no, we made a new all-time high in September 2020. We made a new one in November 2020. And we kept making new all-time highs all the way up until December 29, 2021 and January 2022. Then there was a correction from January until October 2022, so a 10-month correction. And we've just been going up ever since. So January 2022, we were at 48.25. We recovered just at the beginning of this year. So January 12th-ish. So it took about 2 years to recover back to this all-time high in January 2022. And we've just been making new all-time highs since the beginning of the year. So what this shows to me is this is crazy inflation. And if the government or the Fed or central banks cut interest rates, it's going to make money cheaper to borrow, and people are going to borrow it, and they're going to buy things, and it's going to cause prices to do this. And I don't think that's what they want. If anything, like even if they kept interest rates where they are right now, we will keep going up. And again, that's typically what we see in election years. We see the market going up, higher highs in the S&P, stocks overall. But I don't think they would intentionally cut interest rates right now because it's just going to make us like soar triple time. And I don't think they need that much of a price increase in the election year because we're doing quite all right as we are with the interest rates already being raised from what it was 2 years ago. So that's my take on the whole interest rate debacle. I know a lot of people are, I don't know if they're predicting a rate decrease as much as they are praying for it. Maybe they're saying it because that's what they want, because that's what they need for their mortgages and their loans. But it wouldn't make sense to when we are already putting in all-time highs in all these markets. Because it's not just the S&P, it's not just the American stock market, it's also gold. Here's the gold chart. All-time high, 2450. New all-time high. We have never been here before. So we are at the highest we've ever been. If we cut interest rates, gold is just going to go higher. And we kind of don't need that right now. Let's look at silver. Silver is not at an all-time high. It has been higher in the past somewhere. Oh, up here. But it is making fresh highs. It hasn't been here since, let me go to the weekly to make it not so messy. We haven't been at this price level in silver since 2013, 11 years ago, January 2013. So even silver is making fresh highs. We're at the highest we've been in 11 years. So yeah, just wanted to show you when markets and assets are printing all-time highs, that's not really the time for governments and banks to cut rates. Like everything's already crazy high, crazy pumping in terms of charts and asset prices. So everything already looks healthy. Therefore, it's not the time to cut interest rates. When things are healthy and too healthy, it's not the time to cut. Because prices are already increasing at such a rapid pace. So we don't need to entice more consumer spending. I hope that makes sense. What they want to do is they want to keep a lid on inflation. So if they do anything, I think it would be to increase the rates. Now, remember a few calls ago, I told you that I'm like the tin foil hat gal. I know all the conspiracy theories, which, by the way, they're only called conspiracy theories until they become true. But almost every single one that I believed in has come true. But what I was saying was, back then I was always of the belief that the biggest recession ever is coming. The dollar is going to be completely wiped out. It's going to crash. We're going to enter the greatest depression of all time. But I also told you that in the past few years, I have matured on that stance, and I've realized that it's becoming less and less likely to happen, even though we are going more and more into debt, because we have to be as objective as we can as traders. And we have to take things as they are in the market, not what we think. As traders, we have to look at the market with an objective view instead of forcing our subjective beliefs onto the market. Now, I'm bringing that up because check this guy's tweet. I don't know him, just something I saw on Twitter. Remember, at the end of this blow-off top awaits the largest recession since 1929. But first, we go higher until Q3. I found this funny because I was once this guy. I was once posting shit just like this. But I learned that you do it so many times for so long, eventually you have to realize you're the one that's wrong. I've been calling for a blow-off top I've been calling for this, the deepest and greatest recession since 1929. I've been calling it since 2016, 2017, 2018, 2019. And you best believe when 2020 happened with Corona, COVID, pandemic, lockdowns, I was like, this is it. Finally, it's the recession. It's going to be the nastiest one ever, deepest, darkest, longest, craziest one ever. Did it happen? No, it didn't happen. Even with COVID and pandemic and worldwide business lockdowns and no traveling and entire industries locked down, we didn't get it. So that's all to say, between 2021 and today, until now, I've realized, I'm the one that's wrong. I am the one that's been wrong all these past years. I was trying to force my view on the market. I was trying to make the market crash in 2016, 2017, 2018, 19, 20, 21, until, I had to take a step back and be like, no, you're wrong. I'm wrong. And when you look at the market and economy and the way it's going, there's just too many things propping it up. Yes, there may be a reset where a new world reserve currency comes in that, overpowers the dollar, or where a new asset class comes in and replaces the traditional legacy system that we've been on for the past century or so. But a complete wipe and reset where everyone's debts are cleared and everyone starts at zero and all this stuff, probably not. Nothing is ever only one-sided. There are no such thing as one-sided polarities. If a death does come, I'm speaking in quotes, death, death of the dollar, death of the banking system, death of monetary, whatever it is. If death does come, it will bring in the birth of something else. Always. Nothing in the world is ever one-sided. And that's something I've learned as I've matured in my conspiracy beliefs about the markets and real estate crashing and stocks crashing and monetary system reset. But yeah, long rambling there. But my point is, don't be too married to the idea of, let's say, lowered interest rates or a crash, a blow-off top, craziest crash ever since 1929. Because right now, what's happening right now in the market is we are seeing new tops and new highs across different asset classes. Crypto, stocks, metals. So with that being said, it doesn't really make sense to decrease interest rates, which would in effect make people borrow more, and that would lead to higher market prices. And so it doesn't really make sense. What they want to do is they want to put a lid on these crazy prices that we're seeing on all these charts.